Hello and welcome to the set. My name is Julius Omoding. I work with Opportunity International based in Africa. Our goal is to get more kids into affordable schools. And on set today, we have a very inspiring story from Jackfruit Finance in Kenya. And to walk this story and to share the experiences, I have with me Rob from Jackfruit Finance. Rob, you're welcome on set.
Thanks, Julius.
Okay, we will be talking about the journey of Jackfruit Finance, and we're going to be linking this with education and especially low-cost education. So, Rob, to get us started, tell us, who is Rob? We now know about Rob from Jackfruit Finance, but I know there was a Rob in finance. So how did the finance person come into education?
Thanks, Julius. So I grew up in London and spent the first sort of 8 or 9 years of my career working in finance in London, particularly on the credit insurance side, so sort of very credit risk focused. So in my past life, I was walking around in a suit in London, and that was sort of my foundational learning.
Okay, so education. Jackfruit Finance. And the interesting part about this is Opportunity International and Jackfruit Finance have a shared vision of building financially stable, low-cost education schools. So, Rob, let's talk about Jackfruit Finance. First of all, the name Jackfruit Finance. Where did that come from?
So I think it's quite important to know that my first touch point into education was actually in Uganda. So I left London in 2019 and went and restructured an educational NGO in rural Uganda. And that was my first touch point into education. Mm-hmm. I spent 10, 11 months in rural Uganda trying to help 85 children get sent to schools in Uganda. So I came in with very little knowledge or understanding of the education space in East Africa. Mm-hmm. And I suppose that was where the business began, or the idea for the business began.
Okay, and we're now talking about the inspiring story from Kenya that started in Uganda. So 85, you said 85 children. Mm-hmm. So why not Uganda? Why Kenya?
So when I arrived in Uganda, I was literally looking on Google Maps to try and find schools in a rural part of Uganda. So I was about as fresh-faced as I could have been. When I was in Uganda, I visited around 300 schools, as I said. And when I was visiting these schools, it turned out to me that all of these schools were private schools, mm-hmm. not government schools. My assumption going in was that the communities I was working in would be receiving education from government schools, but it turned out the bulk of them were private schools. And then during the period when I was there, it became very clear that these schools found it incredibly hard to access affordable financing. And that is the foundation of the business. That is everything that we're trying to do. It is trying to create the visibility that I had in the small ecosystem that I was existing in rural Uganda, mm-hmm. but at a much, much larger scale. I moved to Kenya because I got offered a job in the tech startup world. So this was my first touch point into the tech world and the sort of scalable functions that can create. Mm-hmm. And that is how I ended up in Kenya, But okay. Foundational learnings in Uganda.
Beautiful. And why this story is going to be of a lot of interest is there are 3 components that we would like to look at. One is the sector, low-cost education. But define for us, in your view, what is low-cost education that is your focus?
So I think the key thing to consider here, and there's a lot of different narratives that go around about the private school education system in Africa. It ranges from $30 a term as a school fee price point to $30,000 a term. And there's everything in the middle. But ultimately, the schools that we are looking to support are the schools that are started normally by a teacher, standing in a large classroom, often in a government school with too many children in the classroom because of the lack of capacity. And they decide they want to go and start their own school. So they start with 20 children and they build from there. Many of the schools that I've seen, actually a lot of the schools I've seen are 20 years or older. They are supporting 150 or more children and doing a very, very good job of it. But they're like the business part of it, and the way that they track their finances and all this stuff makes it very hard for a bank to lend to a school like this, because they wouldn't be able to arrive in a bank branch with audited financials, which is obviously the key component to underwriting a school.
And that is really the foundation. When we talk about financial inclusion, and especially this Financial Inclusion Week, we're trying to see how those who have been marginalized, who do not have access, are able to access. And if we start by saying a teacher in a rural community who starts with one child, maybe her one child, the neighbor's child, and gradually grows this into a big school establishment, that is a dream come true. So the question for me is, many financial institutions would shy away from this market segment. Why is that especially exciting for Jackfruit Finance?
So I think the key is that we've designed the entire business and the entire tech solution around schools. And that's incredibly important, because this is not a general SME. So you cannot lend to them in the way you would lend to a general SME. You know, the cash flow of a school is very cyclical. They earn, or they generate 40-50% of their revenue day 1 to 3 of school term. And then the remainder of the school term, the school fees come in, and they're quite haphazard, because ultimately they are contingent on the sort of income streams of the parents, and the income of the parents is almost always informal laborers, quite sort of, you know, it's not a monthly paycheck like you and I have the privilege of having. So you have to design the products around the schools, and then you also have to design the underwriting process around the schools. So this is where you cannot expect a school to come to you and present you with audited financials and access to an electronic kept like accounting system, etc. So we go into the schools, we gather a couple hundred different data points using the app we've created, and that basically enables us to create a cash flow, a P&L, a balance sheet, and also enable us to benchmark that school in comparison to its peers. Because, as I mentioned earlier, these schools range from $30 a term to $30,000. We target up to about $200 a term as where we view the biggest need for financial inclusion, the biggest need for our products and services in that sort of spot.
Excellent. So one of the things that I feel that is really exciting is you're breaking the stereotype by going to each school, creating an understanding of how they run the school and run the business, and then using those key data points to make a lending decision. But that lending decision doesn't stop there. It's also cross-referenced among the other peers. Why is that important in the way you are structuring the finance?
So, I mean, we essentially break down our underwriting process into sort of 2 different verticals. You have the core financing function, like what are the solvency ratios of the school? Like how much debt do they have? What's their revenue? Can they afford the loan? You know, the affordability function is key because we view ourselves as the financial experts. And if we stress a school with the wrong financial products, or we give them a loan that would stress their monthly revenue generation, then there's a much higher likelihood of default, but there's also we're making things worse, which is not what we're trying to do. But in terms of like the benchmarking function, we have to be able to look at a school that charges 5,000 shillings a term and compare it to its peers. Now, the way we think about that is how would a parent look at a school when they're considering where they would send their children. So we look at a school that charges $50 a term, so 5,000 shillings, and we look at the textbooks to student ratio, teacher to student ratio, like material of the building, you know, do they have a feeding program? Many different data points that enables us to benchmark that school to its peers. Because the bigger piece that we're really excited about, which is just a byproduct of our lending product, is visibility into schools and making it easier for parents to make that selection.
Okay, so why this is very exciting and why we talk about financial inclusion is it just doesn't focus on the school. You have the school, you have the parent, you have the teacher, you have the student, and you have the community where these actually operate. So when you talk about visibility, you are looking at data points that touch to all these because they are key to the performance of the school, right?
Yeah.
Okay. Now, one of the things that I find quite interesting and intriguing is How do you keep the focus on the client? Because when we come to the tech space, I know many financial institutions say, oh, we have developed this, but it's not really something that is focused on the client. How does Jackfruit keep that focus and say, it's education, it's schools, and these are our key data points. This is where we're going to focus?
I mean, I think it's just our foundation is we're an education finance business. And I think one of the interesting learnings that we've been generating, or that we've learned so much in the last 2 years since we started the business, but we are now, vertical specific lending is incredibly impactful and incredibly efficient. So we now have a team, we're a 17-person team now, and everyone in the team is an education expert now. Not many of them were when we started the business, but because all we do is day in, day out, look at schools at different income brackets and schools in different communities, and our networks are in schools. The value to the business is that we're sector specific and we're becoming sector experts. But I mean, the core foundational reason behind starting the business was providing affordable financing to education. So I think that will definitely continue to keep us very grounded in that space.
Awesome. Now, let's go to the meat on the bone, if that's an illustration I can use. Low cost was a challenge for many. Now, AI and digitization. You've spoken about an app. We've heard about Google Sheets. We've heard about what has been first of all, what was your experience introducing this? What's been the acceptance? And what do you see as the future of this application, even as you continue to grow? You say 2 years and the growth has been exponential. So share with us how, one, the attitude towards AI and digital and the acceptance, and what you did as a company to allow that to penetrate into the market.
So, I mean, again, back to my Uganda experience. When I was there, I helped 2 schools create financial reports basically on themselves and went to some banks. Now, that was with the benefit of 8 years of experience in London, so the privilege of my sort of upbringing and foundation. What we were looking to do with the technology was enable someone with less of a financial background to go into a school and capture a couple hundred different data points, so to digitize the school. Now, this is done in many different ways. This is like photographs of the classrooms, cross-checking that with the accounts that are almost always handwritten, cross-checking that with the bank statements, the M-Pesa statements. So we basically have created a system that gives us visibility into the schools. And it's all gathered by our team. And that's really key, because ultimately to make these financial decisions, we need audited financials, audited in the sense that we capture it ourselves. So there is no data entry by the schools. And this is really important. We sit with the schools and we draw out the information we require. Now, there was always a vision that this benchmarking between schools at a similar price point would always eventually need some sort of more algorithmic type techniques to make it scalable, because scalability is the key to us creating system change, which is really what we're trying to do. So what we now have is we've lent to 128 schools. We've had no defaults, which is amazing. It's like the absolute core to what we do. But we've underwritten about 250 of those schools, or we've gathered data in about 250 of those schools. So we are using very much off-the-shelf technology, but designed around schools, that we've tailored to be around schools. And around the sort of 150 school mark, when we had that many in our system, we had enough data points to start looking at that using machine learning, basically. And this is just Google off-the-shelf machine learning. The reason it is working is because the ML basically looks at a school that we're underwriting. It then compares those 200-300 data points with all the other schools that we've underwritten. And then it compares it with all the schools that we've actually lent to. And we obviously have payment data on 128 schools now. So it will give us a predictive number on how late it expects this school that we're underwriting might be. So it's quite a high level at the moment. It's going to continue to become more and more in depth. And when we have a default, which we definitely will, because we're a lender, it'll then give us a predictive data point on the likelihood of a default.
Okay. Interesting. 128 loans, no default.
128 schools. Many of our schools, I should say, have working capital and project and asset finance loans. So helping them build classrooms or helping them buy school buses.
Okay. So for somebody out there who would like to walk this journey as well and say, I want to go digital, talk about time. Your experts go into a school, they collect these data points, and what is your average time frame between when they walk into a school and then when they can finally access a facility? And what is the response from, let's say, the schools themselves? And what engagement do you need from them during that time?
So, our turnaround time can be anywhere as fast as 36 hours. And that's including taking the collateral and gathering the bank statements and everything. So it's slightly contingent on the availability of the data we need to underwrite the school, but more and more cases, we are able to turn it around in 36 hours. And that's because the schools are starting to do a lot of information sharing between them. So in the same way as when I'm talking to another founder, I'll ask them what due diligence a potential investor might ask. They're basically doing the same, because the way we've grown to date is we'll lend to school A. School A will then say, I'm a Jackfruit Finance school. People have started to use it more as their brand, which is really exciting. And then they'll share it on a WhatsApp thread. All of these schools are deeply networked. It makes it incredibly important that we always do what we say we do, because it spreads very fast, but it also makes it very easy to scale. So what we're seeing more and more is schools come to us with all the information ready. Ultimately, what is required is, and we should include a link to like how we lend, because we've created a sort of 2D informational video for schools more, but it might be interesting for this audience. One of our team will go to the school. They'll essentially digitize the school using our app. Then the centralized credit scoring team is able to underwrite the school. So we're sort of spread across Kenya now, but the core underwriting function remains in Nairobi, and that's really key from a cost standpoint, and just from a controls standpoint. So we'll underwrite it centrally. We take the collateral where relevant, and we disperse funds, and everything runs through the app.
Thank you. And for those of you who are joining us right now, I'm on set, Julius Omoding, Opportunity International, with Rob of Jackfruit Finance in Kenya. As we talk about financial inclusion, we are seeing how low-cost schools can grow, and ultimately how the education space can become much better, and how we can get more children into affordable schools. We've just heard how Jackfruit Finance started. We've seen how the use of technology is helping grow to scale. And the question I want to ask Rob now is around acceptance. We have seen that Jackfruit Finance has developed a team, trained a team, and using that technology. What is happening on the school side with the school proprietors and their teachers, and what level of engagement is happening there from your experience?
So we've had an interesting journey with the ability to embed technology into schools. At the moment, all of our technology is enabling us to underwrite schools and digitize the school, but it's very much like a business-facing tech solution. We will sit with the director, we gather all the data points we need, and then we also sit with the director to talk through the results. Because in many of the cases of the schools that we're working in, they've never seen how profitable they are, how solvent they are, like what their liabilities total up as, what their revenue looks like exactly. So we do walk them through that with the schools. Now, interestingly, we did create an accounting app for schools as a little pilot, because the schools all asked for it. And we gave it to the schools, and there was limited uptake. Now, I think that is because just a behavioral change ? And also you need to be trained on it, and we just did not have the resources internally to train it. It's actually something we're talking to Opportunity International about, as about sending schools through the EduQuality program to help them train up on how they do this, which would be really exciting, because this would enable us to extend even better financing if we have data coming directly from the schools. But the constant question that I don't think gets asked enough in the whole tech-enabled lending ecosystem, especially in Africa, is how can you lend when you are not 100% sure about the quality of the data that you're using to underwrite? So we lend, the average ticket size to a school is $25,000. We lend for up to 5 years. So it's long-term secured financing. It's big tickets, and we have to make sure that we're getting those underwriting decisions right, but it also makes the unit economics of how we underwrite the school stack very well on a longer period of time. Less like a sort of digital lender where you have to embed technology to extend small, quick loans that you have to charge much, much higher rates for. So it's a balancing act.
Okay, excellent. And one of the things that I would like us to maybe talk about now is the journey. If I am a school proprietor out there in Kenya and I'm thinking, wow, Jackfruit Finance actually comes to sit with me, understand my business, then is able to offer credit to me in 36 hours. Mm-hmm. I only anticipate that there's going to be an increase in the uptake. And for anybody out there who is watching this and they're saying, what do I need to do? Where are you located? What are some of the steps that your team takes them through right at the onset? I know there's the onboarding process to when you're able to say, okay, now we can do this continuously. And you've spoken about it. Do you give any gadgets out there? But let's first start with the onboarding. Tell us about the onboarding process for a school who says, I want to be with Jackfruit Finance.
I mean, it is honestly as simple as pinging our team, email, phone number, everything's on the website. We'll include links and information below. One of our team will come and visit the school and figure out what the right solution is. I mean, we gather the data points and then there's so many efficiencies that you can create. So one of the things we were having issues with at the beginning was schools would come to us with quite informal designed classrooms. Mm-hmm. Local fundies just designed like this could be what a classroom looks like. How much are all the costs of the materials, etc. So we've got a whole stock set of project plans designed by our professional architecture firm, which makes it much easier. So it's sort of off-the-shelf stuff now. And then, if you need a school bus, we have school bus distributors as well. So we're trying to utilize the network and the economies of scale of what we're building and the fact that it's education specific to reduce the cost for a school bus, reduce the cost for how do you get the classroom designed, etc. So it's actually a very simple process now. The core thing that we'll be looking at is, can you afford it? Okay. And that's the key. We'd never want to financially stress a school.
And because you focus on education, it is important to look at all these data points because they ultimately affect. Now, financial inclusion. And we are looking at a sector that many people have shied away from. And Robert's talked about all the nice things, 36 hours, 128 schools and growing. What are some of the pitfalls or challenges that you have come across that maybe are learnings for yourselves, but also for the audience out there who says, maybe this is something I'd like to do in Mozambique, in Lesotho? What are some of the pitfalls that people ought to look out for, and how did you manage to circumvent around them?
As part of the journey of starting the business,
starting the business, and even now that you actually have 128 schools and growing, mm-hmm. What are some of those things where you, in my language, you say you learned the hard way?
Yeah. So I think so far we've realized that working through the school's sort of organically created networks is an incredibly powerful way to distribute the product. Working through associations and things is much more challenging. So we have now, on the bulk of it, avoided working through any sort of pre-existing structures. We go school to school, we talk to the directors directly, and we make sure we design it around them. So it really is it's an off-the-shelf product from a financing standpoint, but it needs to be tailored around each school, which is why larger loans is a much more sustainable way to lend to these schools. And then there's a few things around the knowledge within the business from a financing standpoint and the knowledge within the school from a financing standpoint. So a great example of this is when we started the business, we obviously wanted to map repayments to the cash flow of a school. So we gave the option to the school to not pay in the school holidays. Quite a few schools said, no, it's fine, I'll pay in the school holidays, and then they had difficulty paying in the school holidays. We say to the school, you will have a grace period in the school holidays, and you will catch up at the beginning of term when the bulk of your cash flow for that term comes in. So it's really, really important that we are the ones inputting the financial expertise into the school, as opposed to seeing that come from the school side, I think.
Awesome. Ladies and gentlemen, if you have just joined in, my name is Julius Omoding from Opportunity International. I'm on set with Rob from Jackfruit Finance. We're talking about the journey towards supporting low-cost education in Kenya. We've seen how Jackfruit Finance has demonstrated what we call a dedicated education product, right? Because it's based on the understanding of what data you have and how they can support you to grow that. Mm-hmm. Rob, let's talk about AI data, and can I try and bring in the Kenyan context? We just heard about the change in the education system and the curricula. Does that affect you?
I mean, I think it affects the whole education space. There is more need in these schools to build laboratories, which is an infrastructure project requirement. So it's definitely increased demand of our products. It hasn't obviously changed the financial capability of the schools to take it or to afford a loan from us or not afford a loan. So we've definitely seen increase in demand. I don't think it's made any difference on the sort of uptake, because schools are incredibly strong financial institutions because they're supported by so many of the community who prioritize education above, in many cases, anything else. So yeah, I mean, the change in the curriculum has created more stress on schools, and we are there to ultimately try and ease that stress by providing affordable financing.
And what is interesting about this is, while everybody looks at affordability only for school and technology coming to support that, we have seen a number of things even on security. AI, biometric authentication for reports, biometric exit in schools. We have seen how it helps with teachers to report to work and help work through that. And now, as technology begins to grow, we are beginning to see the integration of that technology with all the things that schools need. In maybe a couple of minutes, Rob, based on this experience, what do you see as the future for AI in education that will boost that inclusion that we are talking about?
So I think it always comes back to visibility for us. Like, that is the number one thing that we view our product as creating in a wider audience. So by capturing these data points and coming in as a lender, we get access to incredibly unique data that a school perfectly rightly might not be willing to make made accessible to OI, for example, if you come in and ask, because we're offering to provide them with financing. Now, this can create visibility across the education space, which I would love to then be bracketed down to enable people who are looking to, or parents who are looking to send their children to these schools, to say, I want to send my child to a school that charges 7,000 shillings a term, roughly $70, $60. These are all the characteristics of a school at this price point that I should expect to see. And potentially, if we've hit a big enough scale, if they go and look at a Jackfruit Finance school, we will be in the future basically enabling a school to say, I am a gold standard Jackfruit Finance school because I've hit all of the criteria that it is deemed are the most impactful data points to within a school. So textbooks to student, teacher to student. These are some of the ideas. It comes back to like an Ofsted, which is a UK kind of a UK entity that basically quantifies how good a school is. Like, that would be amazing. And that's where the AI would then be able to create this whole data set and be able to benchmark 1,000 schools who all charge the same income bracket, or who all charge the same fee price point, so serving the same income bracket of parents, and we would be able to create a much more transparent framework for parents to figure out what school to send their children to, and for financial institutions globally to figure out how they best lend to schools.
One of the things that really stands out for me is visibility of schools for the parents, for the teachers, for the financial players, and for the community. And for those of you who are joining us right now, I'm on set, Julius Omoding, Opportunity International. We're in 146 countries across the world, Africa, Latin America, and Asia, supporting players like Jackfruit to make low-cost education more affordable and more accessible. I have been privileged to have Rob from Jackfruit Finance in Kenya on set with me today, saying the future of education is really bright because of players like these who have decided to focus and have a dedicated product for education. Thank you for being with us on set. Rob, it was a pleasure to have you.
Thank you, Julius.
We look forward to many, many, many more times when we hear about these success stories. We have seen some of the things that AI can do and we are excited. And for those of you who are out there, financial inclusion is for all of us. Thank you. Stay well.